Today, we're going to dive into the mind of one of investing's greatest thinkers, Charlie Munger. And we're going to unpack a powerful, kind of weird idea, how to win by obsessively studying how to lose.
This right here is the classic Munger quote. It's funny, a little dark even, but it holds the key to his entire philosophy. He believed the real secret to winning wasn't about being some kind of genius who could magically find the path to success. Nope. It was about being a genius at systematically identifying and avoiding every single path that leads to failure.
So how did he do it? How did he build this, map of death for his investments? It wasn't through some complex formulas or secret market predictions. It all came down to a really simple but profound mental shift.
That's it. That's the secret right there. Instead of chasing brilliance, Munger just obsessed over not being a fool. He became a collector of bad judgment, a student of failure. And this idea actually came from a mathematician named Jacobi, whose famous advice was just, invert, always invert.
This is the first key idea we're going to look at, his inverted wisdom. It's the simple recognition that by studying what doesn't work, what leads to total ruin, you naturally start to see the path to what does. It's about finding clarity by first mapping out all the chaos.
So in that spirit, let's try a little experiment right now. Let's completely invert our goal. Instead of trying to succeed, let's design the perfect, foolproof strategy to absolutely guarantee financial ruin. What would that look like?
Okay, here's our blueprint for absolute disaster. Step 1, have no philosophy at all. Just react to everything. Chase whatever's hot on social media. Step 2, use a ton of leverage because, come on, patience is for other people, right? And finally, whatever you do, make decisions based purely on gut feelings and forbid any kind of deep analysis. That stuff is for dinosaurs.
The easiest way to fail is to just do what everyone else is doing. Mindlessly copy others. Just assume that because something is popular, it must be a good idea. And this taps into a really powerful psychological glitch we all have.
Munger gave this a name, the social proof tendency. Our brains are just hardwired to follow the crowd, especially when we're confused or under pressure. It feels safe, right? But for an investor, it's a trap because the crowd is very often spectacularly wrong. Now, this slide is fascinating because it shows you exactly why following the herd is a long-term losing game. Just look at the top companies decade by decade. The 80s were dominated by IBM and big oil. In the 90s, everyone was convinced it was Japan's century. 2000, telecoms. The lesson is brutal and clear. The obvious winning investment of today is almost never the winner of tomorrow. The herd is always chasing yesterday's news. Now, to really accelerate your failure, make sure you ignore all that history and only pay attention to what's flashy and recent. A stock that just doubled, a news story that's everywhere, that's what you should base your decisions on, because our brains have another little glitch. Munger named this the availability misweighing tendency. Basically, our brains give more weight to things that are easy to remember, like a dramatic news story or a friend's big win, than to less exciting but way more important data. And this is the key. A fact isn't more valuable just because it's easy for you to remember. Okay, so we've just designed a perfect system for losing money. We follow the herd, we chase trends, and we let our brains' worst shortcuts guide us straight to disaster. But now it's time to apply Munger's trick. What happens when we invert this path to folly?
See, by flipping our blueprint for disaster, we don't just avoid failure. We actually build a toolkit for rational decision-making. We discover the core principles that act as an antidote to foolishness.
And here's the inversion in action. The fool follows the herd into games they don't understand. The wise investor starts by doing the exact opposite, defining what they actually know.
This is Munger's famous concept, the circle of competence. You don't have to be an expert on everything. You just have to know the edge of your own knowledge and stay inside it. Play in games where you have an advantage. If you don't have an edge, don't play. It's that simple. So how do you build that competence? Munger's answer is the latticework of mental models. Instead of one narrow view, you need a collection of frameworks from different fields. For example, you can't understand a company like Nike just by looking at its financial statements. You need a model from psychology to understand brand loyalty, a model from sociology to understand cultural trends, and a model from engineering to understand supply chains. That's the latticework. It's the ultimate antidote to having no philosophy. So how do you make this practical? How do you prevent your brain's natural tendencies from leading you astray? Munger used a simple, powerful tool he borrowed from pilots, a checklist, just to make sure he never missed something critical. And this is the core of his system. He would ask,
1. Do I truly understand this business? 2. Does it have a durable competitive advantage, a moat, to protect it? 3. Are the people running it honest and talented? 4. Are the finances rock solid? And only then, number 5, is the price I'm paying sane compared to what it's actually worth?
Let's see this checklist in action with one of their most famous investments, See's Candies. It was a perfect fit. It was a simple business they understood. They sell candy. It had a powerful brand that created legions of loyal customers. That's the moat. The management was excellent, and they realized it had untapped pricing power, which gave them a huge margin of safety on the price they paid.
All right, now we come to Munger's ultimate warning. This is what happens when all the psychological biases we've talked about don't just add up. They combine to create an irrational storm.
He called it the Lollapalooza effect. This is when multiple psychological biases, social proof, scarcity, greed, all fire at once, pushing in the same direction. And the key is, the result isn't addition, it's multiplication. It's exponential.
Think about the whole GameStop frenzy. You had a massive surge in social proof on Reddit. You had scarcity rhetoric with the short squeeze, creating intense FOMO. You had authority endorsement from influential figures, and you had public commitment, with people posting their diamond hands. All those forces combined to create a perfect storm.
And that's the key takeaway. In a Lollapalooza, logic goes right out the window. People are catapulted into action. Munger's entire system, the checklist, the circle of competence, the inversion, it's all designed to be a defense mechanism against getting swept up in exactly this kind of storm.
So we end where we began. Munger knew he couldn't predict the future, but by studying failure, he could identify the behaviors that almost always lead to disaster. He learned where investors die. The system he built isn't about being a genius. It's about having the discipline to simply not go there.